46% of S&P 500 stocks right now are above their 50-day, which is not great. It means more than half of stocks in the index are below a short-term moving average. The thing is, though, more than 85% of the index is above its 200-day. So this is a fairly rare occurrence. It's been pointed out by several technicians that I follow that we really haven't seen an environment like this. You have to go back to the fall of 2009. But that actually makes a lot of sense, because the fall of 2009 was another period where we had a massive short-term rally that the markets had to digest. So I'm choosing to look at this breadth divergence as being a moment of digestion and probably ends up being noise. Pick 50 charts at random, like 50 stocks that you've heard of. It's very hard to find stocks that you know of that don't look really good right now. Apple looks so good right now. That's the most important stock in the market, running yet again. New highs for Costco, new highs for Target looks incredible. Home builders are bouncing, industrials are bouncing. FedEx, UPS look good. The ARC stocks are not giving anything back after a huge run. So it's really hard to find important, quote unquote, important stocks that don't look good. I concede, though, there's a lot of weakness in some of the lesser-known small-cap names, some of the lesser-known material stocks, but they've all had huge runs. So take all this divergence talk with a grain of salt. At no point in the last 10 years has it actually mattered that the S&P equal weight didn't make a new high on the same day as the S&P 500 did. That has never mattered. So I know a lot of people look at it. I talk about it, too. I'm guilty. It's not the big picture. The big picture is big, important stocks look phenomenal. And I think we'll stick with that.
A big day for the IPO market. Chinese ride-sharing company Didi opening at $16.65 a share compared to its offering price of $14 a share. However, the stock is losing steam as we head into the close. It's only higher by 2% now. Cybersecurity company SentinelOne also seeing strong demand, opening at $46 a share compared to its IPO price of $35. That stock higher by 22%. And biometric screening company Clear rounding out the company, the group with shares rallying 32%. Mike, clearly there's a lot of action here in the capital markets. Q1 was all SPACs. It's going back to the more traditional methods and IPOs. Good for the investment banks, and shows there's still momentum here.
Right. So, I mean, you want to see a bull market be open to new ideas, new deals, both good and bad. So you just don't want too many of the bad ones. A lot of things can be true at once. IPOs as a group tend not to perform very well over long periods of time, but you want to have a market that's receptive to, letting these companies come out there, have their liquidity event, raise some capital, and refresh this set of ideas out there. And also, people talk about, $80 billion raised in half a year. It's a lot, because it's more than it was raised all of last year and all of 1999. Well, the overall market size was less than a third of what it is right now in 1999. So it's not really a great comparison. It's about what it probably should be, given how high the market is, how strong it's been for this long, and how large we are in aggregate market cap.
So there's enthusiasm, and there are deals happening, Josh. But I'm looking at the Renaissance IPO ETF. For the year to date, it's pretty flat, maybe up a few percentage points, underperforming the broader market. So what does that say about where we are in IPO land?
Sarah, that's a function of that fund's construction. They don't just have an IPO and then sell it after 30 days. They actually will hold these stocks for 18 months and still call them IPOs. So Airbnb is in there. When was that an IPO? In the fall? So I think we want to not always use that IPO ETF as a perfect proxy for the risk appetite for these deals. I think Michael hit on the good point. You want there to be an appetite for companies, not SPACs, right? Like when Didi comes out and it's a huge market opportunity. I know the reception wasn't great, but the fact that we could list a Chinese IPO of that size on the New York Stock Exchange, I think it's a positive. SentinelOne has an incredible pedigree. Dan Loeb is in that. I think the Tiger Cubs are in that. So you want to see the good companies come along and raise capital. That being said, there's just too much money out there, period. Speaking of the rebalance, the U.S. stock market has gone from $30 trillion total to $48 trillion over the last couple of years, over the last, I think, 14 months. That's an incredible amount of capital in the markets. I saw Kodak Black, the rapper, take $100,000 allegedly and throw it off a boat in the Atlantic Ocean last night on Instagram. This is the kind of thing that goes on when there's just too much money out there. And I think we have to balance those two ideas in our minds simultaneously.
You weren't doing the same in your pool today? Not quite?
No, dude. And then he woke up and took another $1,000 and tried to flush it down the toilet. I don't know what's going on. And I don't want to take that one anecdote and say that that's a market top. But come on. You know how many people $100,000 feeds? Why are we throwing money into the ocean? I hope it was fake
terrible.
money. But this is the environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.